You too.
Thank,
Bye.
thank you, Greg. Have a nice weekend. Let's see now. Is the third time going to be the charm for Mark?
Yeah, it will be.
I think so as well.
You know why? Because Mark Newton is a pro who has persevered for many years to hone his craft.
You're very kind, Dale.
Yeah. Hey, Mark. How are you, buddy?
How you doing? How's everybody? Great. Nice to be here.
Okay. So, the last time you were on, did we get this week what you were looking for before your interview was terminated early, accidentally?
Yeah, I mean, my a lot of the cycle stuff I look at suggested that we would see some type of a peak again in mid-October. Unfortunately, we weren't able to talk about that in detail. But I think that this is going to turn out to be very much like 2018, not 2019. And so a lot of the seasonal strength that many people historically see in Q4, I think, whether it be because of the election, which a lot of people will say it is because of, but a lot of the cycles tend to really turn down pretty sharply between now and the end of November. The real question is whether December is going to be an up month or whether we sell off right into the solstice on the 22nd. There's a lot of cyclical stuff that points towards a big inflection there. And so I'm sort of wondering whether stocks weaken, whether, the consensus anyway is that we're going to bounce, right? Everybody I've talked to, a lot of the pushback I've gotten is that, be very careful. This is a tricky week, and heading into the election, you really want to be long, and we're going to bounce. I'm not certain that we're going to get that result that everybody's looking for. And
to bail them out yet.
People thought we were going to bounce into the FANG earnings, of course, at big tech earnings last night, and now we're lower. And of course, we have rebounded off those lows. But here's just a chart of S&P on an hourly basis. So we have made a little bit of progress. We've gotten up above these prior lows that were breached. So that's a minor positive, if you want to say it that. But in general, it's still quite dicey. We literally just started to roll over on very heavy breadth and volume. Momentum and breadth have been waning since the 12th, in the middle part of October. And the defensive trading has picked up. We've seen some real underperformance in technology of late, not just big cap tech, but regular tech. And of course, the dollar started to move up. And of course, that's also something that we all know is important. So.
Yeah, and the clouds, Mark, as one of our attendees has pointed out, that every bounce stayed beneath the bottom of the cumulus nimbus clouds.
Yeah, that's right. Yeah, I like to use these on many different time frames. I find they're quite useful, and many times the cloud can act as resistance or support, even if a trend is broken. It's always important to keep those handy. But yeah, you notice on the bottom half of the chart that we are seeing some
crosses,
a little bit of positive divergence on this little pullback, and so
RSI,
I don't know.
drive.
We're in a time when it's the cyclical time for this period between now and the 14th doesn't suggest massive acceleration. It suggests more choppiness, and that you want to take profits right away. And so, be prepared for a quick, choppy counter trend type movement. But the trend obviously is still very much down, no matter what your time frame. And still, it's we've seen that acceleration lower. Momentum is clearly rolled over. We're not really that oversold. So, does this turn out to be a triangle and then we push back the high? I'm sort of skeptical. I think any sort of rally we get after the election proves short-lived, and then we can see.
Where's the bottom of that red cloud on the chart we're at right now?
That's like 3340.
Okay, probably
so,
like a 30. Yeah, that'd be a good place to fade it if we got there, don't you think?
Yeah. I mean, there's a number of things that come into it's not just price alone, but certainly, you want to try to identify when trends, and not only from just short term, you want to look at hourly, you want to look at the bottom of the first move up and then the pullback. And so obviously this area near 30, the bottom of this move also, 3,400 is going to have a lot of significance. So, I think the middle part of November has a lot of importance for an inflection. And then after that, you can start to see So anyway, I wanted to run through just a few of the FANG charts. I think they're very important. One of the key messages that people should realize is that if the market is truly made up of only 5 or 6 stocks, and particularly Apple being, what, 13% of the Qs, then it's really important to use these stocks to either confirm or dispute what you think about the indices, because this is really the market at this point. So, Apple today is trading down under 110. I'm sorry, this is NVIDIA. Yeah, Apple. Here's Apple. Sorry about that.
Yeah, failing rally up there at 127. Lower high, maybe a B or a 2.
This is a chart that I share with people just on a monthly basis, going back, the fact that you look at a log chart of Apple and everybody in the world was clamoring to buy it when it was going to split 4 for 1.
Right.
And then, the stock promptly sort of crapped out a little bit. We haven't really had the degree, but, the stock has been okay. It hasn't really shown a substantial amount of weakness. But, here's the longer term trend just from 2013 is down near literally $50. So,
Wow.
momentum has gotten extraordinarily overbought when you get on a monthly basis to over 85. You look back in Apple over the last 30 years, it's only gotten up to that level like 5 other occasions. And each one of those times, the stock literally back in 87, it went sideways for almost a dozen years, and in 2000, obviously it dropped 80%. Same thing in 07, we got to RSI levels of near 95. We dropped, from split adjusted $7 down to $2.50. So I don't know. I think that the big tech right now is being attacked right now from both the right and from the left, and I think that's really important. That both sides are sort of pissed off that technology at a sector that's managed to not only invade all of our lives, but take up the majority of percentages in a lot of our indices and ETFs, And so I look at just equal weighted technology versus equal weighted S&P, and this peaked out back in May. So you had a pretty decent rally up until May. Since then, it's been really choppy. And so, yes, the FANG stocks have done okay into August, where most of them peaked. But, this has started to really tail off. You look at MACD turning down. If this red line is broken as an indication of trend for technology, given that tech is still the largest percentage sector, then we're going to start to see real underperformance and largely a larger market pullback.
Could this be like 6-8 months of distribution?
That's correct. Yeah, the last so this is since May.
Okay.
So we have 5.5 months of choppiness in equal weighted tech in terms of how it's performed.
Right.
Whereas like the utilities have done quite well, and that's one thing. The dollar, I think, is something we'll talk about in a minute. But yeah.
I stole your downtrend line in the Dixie. I hope you don't mind.
I mean, let's talk. Let me share a few more charts on Optima, and I'll switch over to TradingView, and I'll show some cycles. But yeah, like Microsoft, I mean, this is anything but all that healthy in a short-term basis. It's very much stalled out since July.
Looks like a head and shoulders top, bro.
It could be.
Yeah.
I mean, the lows need to be taken out, and that's the
Right.
key that I tell everybody that try to front run these patterns, because oftentimes they can just be consolidations and then lead higher. But yeah, for the first time in most of the FANG stocks, you've seen very similar formations.
Lower peaks.
Shows very similar. I mean, a lot of these are just really starting to. Yeah, pardon my colors. It's been an interesting transition for me in trying to figure it all out. So, but yeah, a lot of even Amazon, very similar patterns where you have the highest high was made in early September. You haven't been able to surpass that. So, we're seeing tech waning. The question is, can these other sectors really continue to pick up the slack and show a similar amount of following through on holding? Rates have started to stabilize a little bit. We saw a big tick up in yields, and then, even though yesterday was a decent pattern to be able to snap back, I think that's interesting. But breadth. Here's the breadth, and just looking at the percentage of stocks, for example, above the 200-day, which is now only about 50% of all stocks, 57% as of yesterday. So it's dropped down pretty sharply from 70 back in October. percentage above their 20 is down to 16, and above the 50 is only a third. So you only have a third of all stocks that are above their 50-day moving average, even though markets really haven't shown that much weakness. I mean, we're down 5% this week, but the AD line is sort of interesting when you look at the composite, the fact that we're nowhere near all-time highs. And here's the advanced decline, which double topped and now is starting, it's fallen off pretty dramatically. So yes, if we moved up above these highs, then I would have a little bit more conviction we can rally. But I'm actually thinking markets weaken into December, and then we have a spring rally. And then as of next spring, if the cycles continue to work the way they have, the next spring you really want to be out of stocks, and that you want to buy into pullbacks into either late November or the middle part of December, and then likely be prepared to sell out of any rally into the spring.
Okay.
Yeah,
Got the picture.
sentiment. So we're coming up on an election. I just want to make a couple comments about that, because I mean, it's gotten very close. And to me, everybody in the world has been talking politics basically from a negative standpoint, even though the platforms are completely different. It should be very easy. Either you're for the platform or you're against it. But yet everybody's, going into character assassination. But yet the spread is pretty small. So everybody says Trump's going to lose in a landslide. It's going to be a blue wave. Well, Rasmussen has the spread at 3. So, I mean, that's like the Chiefs being a 19-point favorite over the Jets. And all of a sudden you see the spread at 1. People's like, oh, no way, the Chiefs are going to kill them. Well, maybe, but there's a reason why the spread is that low. Obviously, that's a pretty accurate poll. So it's going to be a lot closer result than many people think.
And definitely contested, Mark.
Contested. Huh?
They will definitely be contested if it's close, especially, right. I mean, they're all lawyered up, right?
I agree that both sides. Look, there's over. I heard there's 80 million ballots that have been submitted absentee. So there's really no way it can be counted as of November the 3rd. If anything, I mean it's gonna be an election month, but I'm thinking it'll be contested both ways, and it's going to be pushed out till December, January. And I think if Biden were to have a clean sweep on November 3rd, then he would win. I think that it's going to be contested, though, and I think there's a good shot that Trump wins it if it's carried out till January. And so, not to talk politics at all, but I just think that it's going to be a lot tighter. And that indecision, everybody's thinking, okay, market's weak now, but we're going to rally after the flag. Okay, that didn't work. So now it's going to rally after the election. Well, maybe, but I don't think that we're going to have all that much relief after the election. So if that's your reason for buying, then you really have to challenge that. All right, let me just share a couple charts.
Nice insight, Mark.
I'm going to see if I can do this here. Let's see.
I'm going to put you on Face the Nation.
So here's the VIX chart. Yeah, I'm sick of arguing.
I know, bro.
It's been a crazy trend. So here's the chart of the VIX. This is sort of interesting that you have had this large base that and it's tough to look at implied volatility based in technicals, but in general, certain patterns do tend to stand the test of time. And the first time we've seen the backwardation, we didn't see that in September, October, when markets were selling off. And so now, interestingly enough, you do see that. But yeah, let's just look at a dollar or just a Dixie chart real quick, because I do view this as being something investors really have to pay attention to carefully. I view this as being a likely 3-wave bounce, and we saw wave A as an ABC up, wave B is down, and now we should have a 5-wave advance into the latter part of November, which should be a huge selling opportunity for the dollar, buying opportunity for sterling and euro. But right now, this dollar advance should cause real havoc for the metals. And so I think the metals likely are going to have a final pullback that takes us down under 1,800 in gold. I think yesterday the market showed its 2 days ago, on Tuesday, Wednesday, the market showed its hand with regards to the metals, which have been sort of stagnating. And so, you really have to reckon with a lot if you're bullish on the metals, with the dollar breakout and yields starting to turn higher. And here's just the yield chart too. You've started to push up again in 10-year treasuries. So if the dollar and yields move higher, then the real rates moving up are going to be really detrimental to any of those that try to buy metals. The other
Right.
thing is that crude is starting to really weaken, and that's also facing a cycle where we're going to start to drop off measurably. So, this is a bearish time of the year. We actually took out 2 prior lows from September, October in WTI. So for me, that is that's something to really be concerned about. That you can see, even though energy has been the whipping boy, it's been so
Yeah.
hard hit, it just shellacked. But I still
Especially
think
the
that
oil
between now and the end of the year-
shares have been even worse.
Yeah, that's still an area it's really difficult to buy into in the area we want to avoid and or short. I mean, for those that are clients, that I have a couple of energy shorts on my focus list, and that I do like, this area is one to avoid. And but yeah, it's a selective time. You really have to be careful about what you own. And the sentiment seems to have gotten, actually more constructive coming into this past week. It was interesting that we had all these problems or people to be concerned about being, contentious election, economy slow to rebound, lack of stimulus, COVID on the rise, no vaccine. It's only recently that, you saw the AII, the individual investor poll, really join. It went to neutral, and it's been negative the entire year. So now individuals are finally convinced that the Fed has their back. Rates are going to stay low. They're convinced that a Biden win is no longer going to be bad for the market, because everybody says the blue wave initially, all those, wizards from all the high Wall Street firms wrote the reports saying that this could be a real negative and strip 9 points off GDP. Now everybody's saying, well, there's going to be so much stimulus that it's not going to matter. Well, maybe yes, maybe no. But still, I think it's funny the way that people have gotten really complacent about the election of late, and the Fed, and or some stimulus is going to come down the pike. So that for me is a concern when you start to see sentiment on the individual side join institutional sentiment. And so, granted, we're not there. We're not ecstatic, obviously. And this week's weakness has brought things back into, it's guarded, right? But it's certainly not all that complacent, if anything. And it's definitely not fearful, that's for sure. So I think it sets up for a really interesting period of volatility in the latter part of December.
Okay.
I want to share one more screen with you, and because this is interesting, because I joined the Foundation of Study of Cycles and ran the MY composite cycle going back 40 years. And, here's a cycle that pinpointed highs pretty correctly back in the early part of 18, the latter part. It was early by about a month this year. And, what's funny is that it shows a pretty dramatic sell-off into the end of November, mid-December, before a pretty big rally into year-end. So, for those that are aware of the cycles, yes, we do have obviously a lot of energy coming up into end of year, January, February. But I would argue that markets likely sell into that part and be similar to 2018 versus just thinking that after the election it's going to be up and away and everything's great. The other is the VIX cycle, and I like this only because it is an exact opposite cycle, and as you expect. I mean, markets are going to sell off, the VIX should rise. But yeah, this shows a move up and not really all that much tempering. Like, it shows the VIX actually moving pretty much higher into the end of the year.
Nice. Yeah, that's a cool chart. I'm glad you're involved with these guys.
Yeah, it's a great organization. I really respect the work of Andy Pancioli and Bill Cerubi, aka Bill Meridian, who's on the board, and Lars Van Tienen, sorry. He's been kind enough to make the Cycle Finder available, and Dr. Smith. They have a lot of archives, which they just brought and established a new setup in Virginia. And so I'm happy to be able to be a member and just take a look at all the different cycles.
And now you're comfortable. And now you're comfortable talking about this stuff, Mark, which I think is a breakthrough.
Well,
what do you think, man?
I think that it's important to use all different inputs in your process. It's certainly not the Fed. It's certainly not earnings. The Fed is not going to be able to prevent the decline. That's the problem. Everybody thinks you follow the Fed, and that's true. But the deficits now are at levels where you can't just continue to ramp up fiscal stimulus, and you certainly can't jack taxes when we're in a recession. So it's an interesting, how do you actually fix the economy and grow productivity when things are dire? And
Yeah.
that's my issue.
This was
So
like
I don't know.
a Sir Isaac Newton presentation about gravity. And why don't you show your website, and so that people during this critical time in the markets can be in touch with your thoughts, which, Mark, Blake, you're Blake's favorite. You're one of my favorite guests that we have here. And,
Well, I hope to make it to your favorite soon, Dale. But yeah, can everybody see this?
well, you're almost, you keep trying,
I know I have a few technical difficulties, but some of them aren't my own doing. So
well, I know, but
that's the plug.
I have to be a diplomat because Mark, I have 1,000 favorites.
I got you. Fair enough.
Anyway,
Fair
all
enough.
right.
So yeah, I'm at newtonadvisor.com. You
Yeah.
can follow me at Mark Newton CMT, or simply send an email to info@newtonadvisor.com, and I'm happy to put you on a trial or send you. I put out 2 reports a day. I do a video every day, midday, to describe what I see as being the most important movements in the market and sector rotation and areas of importance for those that like to trade. But yeah, mostly it's just a broad-based technical discussion, very thorough and detailed, very short-term oriented on where the S&P can go, where FX, commodities, and I tend to run the gamut, and I look at a lot of cycles and time work and sentiment, and so I think it's for anybody that has a need for direction in this market that's not just buying every dip. Stop by, see what we're doing.
You have the best holistic view of the market.
Yeah, I appreciate that. Thank you.
All right. So you take everything. You put the jigsaw puzzle together for people, Mark. So again, thanks for coming in during this important time in our history and sharing your work with us. And we appreciate you here at F.A.C E, my trading warrior brother.
I appreciate that. Be safe, everybody, and happy, and keep your chins up. The election will be over before you know it. Hopefully, we'll return to normal within about 18 months.
Okay.
Take care. All right.
Thanks, Mark. All right. All right. Take it easy. So, everyone, that's a wrap for a week. We only have another 18 months of this. You guys okay with that? I'm going to hide my razor blades right now and my rope. I'm going to hide them in the wall safe and try and stay away from them. Anyway, everyone, have a great weekend. We're here for you. We'll be trading through the election. And remember, at times in the market, what's more important is the return of capital rather than the return on capital. So don't just count your pips, count your blessings, everyone. You're welcome, Galaxy, Giuseppe, David, all my trading warrior brothers and sisters. Have a great weekend. Adios. You're welcome, Richard. Valencia, see ya. See ya, Jeff. Back at you. That's right. Do your work over the weekend so you're prepared to execute instead of impulse trading. Shabbat Shalom. Inshallah. Nostrovia. Okay.